Today, my conversation is with Ryan Rosett. Ryan is a CEO and co-founder of Credibly. They're basically a payment platform for small businesses. So if you need a loan, it could be $65,000, $100,000. They can turn this around pretty quickly. They're based in Detroit, and it was just a great conversation on talking a little bit about culture. They've been running this business and having it really evolve over the last 14, 15 years. We talk about culture and like how that's really changed over time, how they dealt with COVID, talking about hybrid versus remote. We talk a little bit about culture and how they built their culture all the way through this process. It was just a fun conversation. Ryan has a lot of experience in growing his business, and just interesting from the standpoint of he's constantly trying to evolve and make sure that he's staying up with the technology. And it was a really good conversation. So I hope you enjoyed as much as I did. Ryan, welcome to the podcast. I appreciate you making the time.
Thanks, Todd. I appreciate it.
Well, good. Well, why don't we talk a little bit about kind of what you're doing today, and then what got you there?
Yep. So I'm a founder, co-CEO of a company called Credibly. We're a small business Fintech lender that concentrates on providing working capital to small businesses throughout the United States. We evaluate the customer based on a number of different criterias, and we provide offers typically in less than 4 hours, and we fund same day. So it's really what we sort of pride ourselves on is user experience, speed, access to working capital, and providing what we call the right size amount of capital for a customer that they can support their business as well as afford to pay us back.
And so is that like in lieu of getting like a line of credit with a bank? Like maybe talk to me a little bit about the dollars that they're using and like how they actually use it. Is it basically kind of like a revolving line of credit? They kind of just draw down as they need it, or it's something that's more just deployed pretty quickly?
Generally what we do is we have a product that's called a bridge product, but for the most part, it's a term loan.
Okay.
Or a merchant cash advance. So it's the majority of what we do are term loans. It's if you're approved for a $100,000 loan, we issue $100,000. It gets sent into your business banking account, and you can use those funds for business purposes. And that's what we do. So we're not monitoring the use of the funds, but we do look at the cash flow. So, as much as credit is a component of our underwrite, it's not a huge component. The big piece of how we look at a customer is based on their cash flow and how they manage their cash flow. So when I say that, we're really looking at average daily balances, negative days in the bank, NSFs, things of that nature to really see how the customer manages their cash flow and how much cash flow is available to, one, service the loan that we're making them, and then two, to ensure that they have enough money to support their business operations as well.
And so is that like a balloon after like a certain payment time? Like what's the payback look like?
The payback is like on average, we're 1 year. So it's, short term. Mm-hmm. Depending on the product, if it's a merchant cash advance, it's, there is no interest component to it because we're buying a receivable at a discount. If it's a term loan, there's going to be an AM schedule to it.
Yeah.
So where the interest will be more upfront weighted, but it's going to have like an amortization schedule such that after 1 year, the amount is paid down 100%.
Okay. And give me a demographic of your kind of target customer that you kind of target that you would think is a good fit for you.
Yeah. So I would say that we provide working capital to businesses that have $10,000 a month in gross deposits, have been in business for a minimum of 6 months, have over a 550 FICO, and then we go across pretty much of the full gamut of industries to provide working capital. So, I mean, there are a few outlying industries that we don't, that are restricted industries, and they're sort of like obvious ones. I would say, sort of like adult, strip shops, gambling, things of that nature that,
Yep.
just from a headline risk standpoint, we just
Yep.
don't do.
Sure.
But beyond that, like we lend into, I think, 300 plus different industry types, and it's there's really all flavors of customers, from like doctors who've been in business for 20 years, lawyers, businesses that do in excess of $10 million in revenue. I mean, so to smaller businesses, bagel shops, dry cleaners, bakeries, Main Street type retail type businesses. But we do it all. So
Hmm.
it's really like we're really just looking at a business and making sure that the business owner is the owner of the business. The business that they're in is the business that they're portraying. And as you can imagine, in the world of AI and online banking and things of that nature, fraud is pervasive. And so a number of the things we do on the underwriting side have sort of fraud prevention tools associated with it.
So you have quite a few customers. How long have you been doing this for?
We've been doing it for 14 years. So
Yeah.
since 2010, I want to say 15 years in December. So we're a
Well,
couple
that's
months
impressive.
away. So
Yeah,
yeah,
congratulations.
thank
So
you.
maybe go back all the way to the beginning. Like, what was it like to kind of start this? You had an idea, you had a target. Probably the AI tools weren't kind of available the same way they are today. But like, maybe kind of put yourself in the shoes of like you're that entrepreneur that's trying to figure this out and get yourself up and running. Maybe talk to me of like just what that like first year really looked like for you in business.
Yeah. So, and I've been in many different startups in my career. So, but this one I've been doing for the longest. It's like any business, it's like it has its good days and bad days, and I don't want to say like it's any different today, even though we're much more established. But there's better days, and there's days that are somewhat rotten. But I would say on a startup perspective, you're kind of just doing everything. So
Yeah,
like my partner
yeah,
and I were dialing, calling for customers. We were meeting with customers. We were underwriting files. We were handling the portfolio. We were, so it was like really the full gamut of from soup to nuts, which I would say really helped from understanding the business of like wearing pretty much every
every
different
role.
hat,
Yeah,
yeah, in every role. So now when we have a much bigger team, but like I granted, like a lot has changed since like we were doing that from a technology standpoint, but like we were really doing everything. So there's nothing that I haven't done, from the business perspective, even though today our processes are so much different and tighter
more
and
mature.
more mature.
Yeah,
So
yeah,
so that's it. But I would just say, like, from the way we started the business, it was really we started in 2010. It came out of like the Great Recession. There was very limited working capital for small businesses. Banks were sort of were not lending, and when you think about, like, some might say like a bank is our competitor. I don't view a bank as our competitor. Our average loan size is $65,000. Um, Banks aren't equipped to do $65,000 loans. They
yeah,
want to do
yeah,
250,000 plus, or
yeah.
$1 million loan. That's just not. We do go up to 600,000, but for the most part, like the I'll call it our meat and potato everyday type of loan that we make is a $65,000 ticket size, and so and we move fast, and so where small businesses may have a situation, they may have an opportunity, they can buy something at a discount,
Yep.
they need to renovate their store. They need to buy a pizza oven. They need to, they had a flood and they need to redo the floors, whatever the case may be. And if they don't have friends and family to borrow from, oftentimes banks are going to, drag them out 60, 90 days and potentially say no.
Yeah.
We just, like, that was what the impetus of starting the business was. Like, this isn't a great user experience. We want to create a better user experience for our customers, and we continue to work on that. So trying to make like the process better and better and easier for the customer to access capital, and like even if we reject you, you're going to know really fast. So that if you get a decline from us,
Yep.
which is, it happens, but
Sure.
it's I think you'd rather a
No
fast
quick.
no.
Yeah.
Yeah. And
Yeah.
that's, it's, no hard feelings, come back, when you have maybe, some more established business credit or whatever the case may be. But like at the end of the day, we're just, we have to protect ourselves as a for-profit business as well.
Yeah. So where did you get your money up front? I mean, was this like a bunch of investors put money in to lend, or you had some other, or you had a pool to start with?
Yeah, so my partner and I started the business and we seeded the business,
Okay.
and then we raised a small round of friends and family that was like for a fund
Mm-hmm.
to like actually use the because our inventory is money,
Yeah.
and so to lend, and then fortuitously, we entered into a partnership. It was a joint venture with a factoring bank that was located in Michigan, but they had a national footprint.
Okay.
And it was like a unique opportunity for us because we were able to do a joint venture with them, and where we were actually table funding using our own capital, but then selling it to the joint venture, which was
Oh, I
funded by
see.
the bank.
Mm-hmm.
And so it gave us a lot of capacity to grow.
Huh, that's an interesting model. And so basically, they turn that around pretty quickly. So basically, your working capital always gets returned, and then you can do the next loan.
Yeah,
Yeah.
that's basically it. Yep.
Yeah. That's
So
pretty interesting. Well, maybe talk to me a little bit about just the role technology's played in your business, right? It sounds like in the early days, all of us are kind of in this scramble to, like you said, wear multiple hats. And there's no pattern initially with a lot of things, right? You're doing a lot of one-off things that don't scale until you see patterns. But would you say that like technology has been a huge investment for you to like scale this business? It seems like it would have to be.
oh, absolutely. I mean, I would say just from an OpEx standpoint, on an annual basis, we spend millions of dollars a year on technology.
Yeah,
So it just and it's it's never ending. So it's like, to say like, hey, we're going to spend this on technology and we'll be good, meaning like, we won't have to spend it again. It's constant. So like, staying in front of the technology as the technology continues to evolve. I mean, I don't know. I didn't foresee like artificial intelligence coming in at the rate that it came in,
hmm,
in the last 24 months when I think the first chat GPT like sort of model was released, to now where you have, Gemini, Perplexity, you have Anthropic. You just have so many different large language models out there to select and kind of pick which ones work best which ones work best for whatever the prompts that we're seeking the data from. And it's so like it's just an evolving process. So like the technology where we started and where we are today is dramatically different.
sure.
And it continues to evolve and it continues to improve. And I don't anticipate ever not spending a substantial amount of money on technology on an annual basis. I just think it's a just constant.
So how do you think about that? I mean, I guess like I worked for a company called Concur Technologies that was kind of in the travel and expense space, and so you build you build a code base, you leverage new technologies, and you wake up 10, 15 years down the road, some of that legacy code ain't great, and you've kind of rebuilt some of it, but you're definitely dragging some stuff down the street, and innovation becomes harder. And so I'm curious on how you guys have thought about that over a 14, 15-year period, because there's these epochs of new technology that come. You build it on, and even like your data science stuff, right? I mean, your data science probably came before the LLMs, and now some of that is probably duplicate and some of it's better, but you probably leverage some of it. So talk to me about like from a code maintenance or technology debt standpoint, how do you just kind of stay up on top of that?
That's a great question because it's tech debt for us is like a constant sort of struggle,
Right.
and we're like I'll call it a medium sized business, but not a small business necessarily, but it's a staying in front of like all the technological changes is even like the language our sort of loan origination system was written in. It was written in a PHP,
Yep.
And like, you know, if I had to redo it over again, like would we write it in that? We probably wouldn't.
Right.
So, you know, so what we've done is we've broken out a lot of the pieces within our loan origination system. So we have a number of different microservices that sort of operate, and you know, it's almost like a spoken wheel,
Yep.
so that we can change, you know, certain things that sort of sit outside of our LOS, and then kind of get, you know, the data will kind of get put into our system. So I mean, you need one system of truth, and
Mm-hmm.
that is our loan origination system.
Yeah.
So but even like we're in the process now of evaluating servicing platforms, and you know, servicing is like sort of a, we currently service our own portfolio, but like it's pulling the servicing piece out of our technology is like a very heavy lift. But like there's so many different servicing platforms out there, and all they do is just servicing. Like that is their service,
Yep.
is offering a servicing platform. So while we want to be really good at what we do, we want to leverage other technologies that augment what we're trying to accomplish, our end game, which is just, again, just to be a very seamless, user friendly lender for small businesses. And, you know, we're not trying to be a consumer lender. We're not trying to be something else. We just, you know, small businesses need working capital. We want to be the best in the industry.
So let's kind of sharpen that a little bit. I think you say something that maybe you've trivialized a little bit. I think what you're trying to hone in on is what is it uniquely that you guys do? And then are you willing to outsource some of the other elements? Maybe at the beginning, they weren't available, so you did it yourself. But as
Yep.
more and more of these services come on, if they're doing it and that's their best of breed, and that's not my core competency, why not leverage it? And
That's
so
exactly
I don't
right.
want to put words in your mouth, but I think that's what you said. But I think that's super hard. I think, especially dev shops, right? Like anybody that's in a dev, they're like, "Oh, I'll build it," and it's like you could, but like these guys do it really well, and like they have a whole set of maintenance and roadmap and all that sort of stuff. And so leveraging that is a thing. And so is that a cultural thing you started at the very beginning? Because sometimes that doesn't always wash.
I would say it's evolved. Okay,
Okay,
just
okay, that's good.
just because in the beginning, I would say there was less available for this industry. This industry has matured a little bit, and so there's been a lot more services that have been added on that we can bolt on to our products to offer more of what we're looking for. So like I'll just give you an example. We use a product through. I think it's Experian, that it's called Email Age, and it's a, basically we'll look at like the age of the email. Okay, so which is predictive for us at some level. So, for example, Todd, if were seeking a loan from us and you uh, put your email and you got your email yesterday, I want to know that, just from a lender standpoint, that
Sure.
to me that's like a red flag.
Yep.
But if you had your email, it was active and it's been around for 8 years, and your
Right.
business is an 8-year-old business, that ties
Great.
out.
Sure.
So and so that, like, that's an example, like, domain name vintage, things
Registration.
like that.
Yep.
Yeah. So I mean, but I'm just giving you, and then it goes on and on and on. And now there's companies that do, either like Secretary of State verification. So they're looking at like when the company was incorporated, and does that tie out to the owners or the registered agents that are listed on the papers? And so, everything for us just needs to tie out, and it needs to tie out quickly. So like, because we're doing all API calls and we're looking at this data, and then it's coming back in our system, and whether or not it gets flagged is as and we talk about like a human in the loop. There's like a happy path for an application where it bypasses humans, and then it gets kicked out for certain flags.
Reviews. Yep. Yep.
For reviews, and it
Yep.
doesn't necessarily mean it's declined. It means that it needs, it's not tying for some reason, and it could
Yep.
be as simple as like, it says TODD versus TOD.
Yep.
I mean, it might be something as like simple as that. You just can throw it back into our workflow. But it does, like, the computer is not able to discern between the lack of 1D as to whether that's you or if it's somebody else.
So one of the things I think you just kind of summarized is a lot of legalities around know your customer, right? And so, um, I mean, a couple war stories on our front from Concur's days. It's like I think we ended up having ISIS and some Mexican cartels using our payment products to move money around move money around the world. And so, obviously people called us and said, this ain't cool. And then we had to institute a lot more of know your customer type of protocols, even just signing up customers and getting them deployed. And so maybe just talk about that. Like, I think there's a number of businesses that have elements of this. And I think that in this kind of security conscious digital world, there's more and more scrutiny on that for businesses to know who their customer is and validate them. And I'm sure you have to do some of this. I mean, a lot of what you just talked about is part of that process. But there's definitely services that do some of this to validate that. But maybe just explain what it is, why you have to go do it, and then how you kind of build it into your business.
Yep. So one of our products, for example, we have an online checkout, and so that is if your application qualifies, we want to make it such that you have the ability to check out online, which is basically like a 7 to 10 minute process. It essentially asks you a series of questions. You go through biometrics, so meaning that you take a picture of your driver's license, takes a picture of your face, and then it does, and then there's another product that does like a geotagging. So you want to make sure that this customer is not, I know there's VPNs and things of that nature that would, if somebody's like trying to fraud you and they're in Moscow, and they are coming through some VPN that's showing up in the United States, you can mask that. But for the most part, we're looking for, if you're in South Dakota and we want to know that you're within the vicinity of your location, not necessarily, and you could be on vacation or whatever the case may be, but just like you're in the United States. So there's just and I'm just giving you an examples of a number of different fraud checks that we have along the way that are constantly pinging different APIs and tying back to the information and the data that we have. So it's and that it's just a constant check, and I think we're good at it. But it's like, to your point on technology and the advancement of fraudulent driver's license and things of that nature that AI can sort of spin up in seconds now. So you have to be sort of ahead of it and make sure that you're tracking it as well as you can, because otherwise, you can lose pretty quick. So
Yeah, it's interesting. There's just a lot of pieces to it. Maybe like another question I guess I'd have is, your home base is Detroit. I'm in the middle of the country in Rapid City, South Dakota. Like, why build there? And so, I think there's this propensity, and there's a lot of narrative around build on the coasts, Silicon Valley, or one of the other centers. We feel like there's a lot of benefits to doing it in other places, but I'm curious. I mean, was this a family decision that you wanted to do it there? Like, was there enough infrastructure to really kind of build, 14, 15 years ago? There's cities are getting smarter about the critical mass and the elements that they need to build entrepreneurial ecosystems. And I'm always curious about people that are the first starters, right? Like, I probably was in Detroit. We had a lot of auto clients, and so I was probably there 15 years ago, but probably not in the startup world. But what was going on 15 years ago, and has that been a great place to build a business?
Yeah. I think it's been an amazing place. I mean, first off, I wish I had decisions. If I was born in a different part of the country, that would be a different story. But I was born in Michigan. I went to University of Michigan, and my wife's from Michigan. My partner's from Michigan. So it's just
That's where we're going to do
hometown. Yeah. So I wish it wasn't. I just came to Michigan because it was such a great, kind of startup place.
Yep.
There is, I'd say one of the largest fintech startups in the country is there, not, which is Rocket,
Okay.
which is
Yep.
Rocket Mortgage, and so, I'd say it's one of the largest, if not the largest, fintech, that I'm aware of.
Yep.
And so, and so there is a lot of talent. I would say that when you think, like, we have an office in New York, we have an office in Arizona. The cost of labor is obviously more expensive as you go to the coasts. We find
Yep.
that there's good a good cost for a good cost of living in Michigan, as well as the cost to hire. And there's very smart, capable employees that we're able to attract to our business. And so and it's not like finding somebody in our space that has experience. If you have experience in software development or engineering or data science, it all applies. So it's not necessarily, having experience in specifically what we do isn't necessarily important. What's more important is that you have the work ethic and that you fit in culturally and things of that nature into what we are building.
And so are you guys remote, hybrid? I mean, I know you've got some offices in different places. Are you trying to centralize people in those offices? How does your culture work?
So culture is super important to me. I would just say that that's like and I know I'm sure plenty of CEOs would say that as well. But it's just like it is super super core to our business. We obviously we were remote during COVID. We were slow to sort of move back into a hybrid. But we've enhanced our hybrid, so now we're 3 days a week in the office and 2 days a week are remote.
Okay.
And we do have some remote employees throughout the country. We have a fairly significant uh, number of employees that are full time that are in India.
Hmm.
But for the most part, I would say I don't know, 90+% of our business is based in the United States. 100% of our business is based in the United
Yeah.
States. The employees, about 90% of them are United States, and I would say our mix is somewhere between, I'd say 80% is Michigan or 70% is Michigan, 20% is Arizona, and 10% New York.
But like maybe just to put a finer point, you're basically saying they got to be close enough to the office to get to it 3 days a week, right? So you have no, other than the Indian
Yeah,
folks, you don't have really.
we do. So we hire for talent. So it's not to
Mhm.
say if we have a job opening. I mean, we obviously try to fill it such because the collaboration piece is important to us. So
Yeah.
having
Oh yeah.
people close by where they can collaborate with other people, learn. I don't know. And I have a daughter who just graduated college, and I'm requiring that she works in the office. I
Yeah.
mean, as much as my voice matters,
Yeah.
I just think it's a very important part of learning. Going to the office, learning from other people, advancing your career. I
Modeling,
just don't think.
seeing how people
Yeah,
actually work. Yeah. Yeah.
exactly. I just don't. And this is just like philosophically, like my position. I just think it's harder to work in a remote environment and socially, like just from the standpoint of just I'm not asking you to be best friends with your coworkers, but for the
Yep.
same time, you learn from your coworkers and
Yeah.
like your career advances because of that. And
Yep.
there is a culture, and I haven't quite figured out how to crack the culture from a remote environment. I think it's really challenging.
Yeah. So, like, maybe let's kind of go back to the comment you made around culture. I think early stage startups, it's kind of interesting. Culture isn't really something they basically go out and talk about. They basically it's the culture of the founders, right? That's what it starts to be. And then I think good ones basically as they start to get away from hiring a little bit, maybe document some of what they're looking for. I think more times than not they deferring hiring to some other people that are managers and maybe the people coming in aren't their people, and then you start having some fraying of kind of like what is the culture. And so I'm kind of curious from your experience, you've done this a couple times, and it sounds like culture is important to you. How do you actually like define what that is and then basically make it something that's not something on the wall or something that we put in a document, but it's something that we actually live, reinforce positively, and there's consequences to negative actions?
Yeah, that's another great question. I would just say it is creating company values, and like we've had company values before, exactly as you described, where you kind of put them on your wall and
Yeah.
like that's our values. But like over time, we actually said like these really are our values, and and they evolved. I'd say one of them is like spirited debates for us.
Hmm.
Like we debate things a lot, and like we want to debate. Like we don't want to be. I personally, I don't want to be right. I want to be. I mean, I want the decision to be correct, but because I think something is right doesn't mean it is right, and I want other people to opine as to what is your opinion on it, and should we go this direction or not direction, and why, and what are the implications or the ramifications of it. So I'm a big believer in just like having good debates, standing on your position and arguing it, and it's a constructive argument. It's
Sure.
not it's
Combative.
not like, we're not fighting. We're
Right.
just having spirited conversations. We care is another one. Like we do care. We care about our customers. We care about our employees. And we want it to show. We have a huddle, like a company-wide huddle every week. We share our metrics. We share our originations. We share our profits. We're a private company. We have no obligation to share this information, but we want everyone to know like who they're working for and the transparency we bring. We're not trying to hide anything. If we have a bad quarter or
Yep.
whatever the case may be, we want you to know it. Not that you're worried and freshen up your
Resume.
resume, but but like on the same token, we just want you to be aware of like some of the maybe speed bumps we're hitting, and oftentimes they're obvious and they are explainable, whether it's like COVID, as like a prime example. I mean, nobody was like, not nobody, from a small business lending perspective, nobody was killing it during COVID.
No.
I
No.
mean,
No.
let's be, but having that transparency to our employees, to our bank partners, and they were, I think, very appreciative of like the way we just consistently communicated and going to this like weekly, and we call it a huddle format.
Hmm.
We stayed with. We stuck with it. We used to do it once a month, like pre-COVID, and then we went to a weekly just because like this, kind of
People want to
remote,
know.
and everyone was like, away, and we felt like we needed to bring people together. We consistently refine our messaging to our employee base. But I think, from the standpoint of, was everyone happy when we made a modification and asked people to come to the office? No, because I think people generally, think they're entitled to do what they want to do or work from home. But like, we did it from a business standpoint. We weren't doing it to be punitive. We were doing it
Yep.
because, like, in the best interest of our business was to have people working together and collaborating. And the impetus of it was really the artificial intelligence, and where we want to be ahead of it and make changes. And the when you have these people, everyone's working, sort of behind a computer in their home office and slacking or g-chatting or whatever their form of communication is, to their coworkers. It's a lot different when you can lean over someone's shoulder and say, hey, look at this, like, you see what this is doing, and or teaching or having a
Yeah.
conversation. So that was the intent behind it. And not everyone's happy, but that's okay. That you can't make everybody happy.
So I guess one of the things I draw on that section is whether you have transparency about what you're doing, you want to have hard discussions. Those are all great things. They require trust, right? And so, what do you think the precursor to kind of building that trust culture where it's okay to be vulnerable, it's okay to share this type of information? You need people that are adaptive, right? Like, you need people to say, like, you got to trust me that, like, we're going to get through COVID. We're going to get through it may not be perfect, but I'm going to give you the transparency. And I think so many times that data, in a lot of cases with startups, gets centralized, right? We only want to tell good news to the floor, which is not great, right? I think you're not taking them on the journey. But like, maybe talk to me about what do you think some of the precursors to your culture and really having trust that enables all these other things that you find valuable.
Yep. So I would just like and I'm just going to self-reflect a little bit on this, because like I struggled with delegation when I
Okay.
first started this business, and like,
Yeah.
where I felt like I could do it better, quicker myself. Okay. Or, and I'm not saying it necessarily was better or it was quicker, but it was, in my opinion, it was the way I wanted it.
Sure.
And I realized, over time, as we were growing, you had to push down and let people kind of make their mistakes and learn. And it was like, for me, that was a learning curve, like that I had to adapt to. But like that sort of like snowballed into a much bigger the way I think our business works now, and my partner and I have a very similar philosophy on this. Is just like we allow people to make their own decisions and make their own mistakes, and I actually applaud like an error if it's like a small error and they don't do it again. It's like learn from it and let's move on. Like we have a culture of like not pointing fingers. Like we're not like this is your fault. You did this. You screwed up. Like that's not what we do. Like we're okay, it was a mistake. Let's move on. Let's move past that and let's not let that happen again. But and if there's a habit about that, then there's an issue. But that's a whole different story.
Do you think like these core values, I guess like my experience at Concur was the core values provided rails and the autonomy to make decisions. And like I think like you're just saying, most of the time you make the right decision. Sometimes you didn't. But if you were using kind of the core values around the customer or doing it together, whatever it happened the core value to be, more times than not, it worked out. And then even when times it didn't, but you were trying to follow core values, like, again, it was kind of one of those things where, okay, no problem. Like, let's just learn from this. Again, don't do it again. But it was a culture of continuous reinforcement of these are the values that we have. And so I don't know if you felt like that really ties in, but to me, a lot of the stuff that we did, it gave guardrails to what was right and wrong. And as long as you were kind of staying in between those things, we had a lot of latitude to like do the right thing.
Yeah. And I would say exactly. Like, I mean, that's exactly the way we operate. It's not this is who we are. These are the culture. These are the values that are important to us,
Yep.
and we live by them. So it's not like like I don't think anyone would say that like the way that we act is different than what our corporate values are.
Sure.
So it's something that we absolutely live by. Like we just added like a new one, which is like we are curious, okay? Because it's like we are curious, like we want to explore like the possibilities of like what can AI do for us? How can it augment our underwriting process? How can it improve our charge-off rate? How can it make the customer experience better? How can it bring more originations in? Whatever the case may be, it applies across like pretty much every department within the company. So like explore and be curious about it, because if you're not curious, and I've said this to like our company, like if you're not sort of ahead of it or being curious or speaking up or having spirited debates, like ultimately, like we will figure out a way to automate like the folks that are just like sitting behind a computer and not interfacing with the company. So it's that may offend some people, but it's like it's not credibly. I think it's across like all industries. So like you need to evolve with the industry, with the technology changes that are occurring, or I fear you'll be sort of passed up, and I fear that about about Credibly is like staying in front of it so that we are in front of it and making the changes that are required to be really sort of technology forward.
So I have a daughter that just graduated from college too, and so I think the marketplace is different. I don't think it's as easy to get a job as maybe it was when you and I got out of college. And so maybe talk to me about like how do you instill that kind of curiosity? I think it goes back to a lot of your core themes, right? You need people that are okay with change, right? Because things are moving and we're asking you to do different things, but you got to trust us. We're going to take care of you if you continue to do these things. And so maybe just talk to me about like the cultural change of AI in your organization as this thing is kind of moving along, right? You see value in it, right? You need people to get bought in. They can't be defensive that this is going to take my job. But like all these elements of kind of trust and transparency and good conversations and curiosity that you talk about from a core value standpoint really fit into this is the direction we got to go. Trust me, we're on this journey together.
Yeah. So I would just say that, from the, how AI is like affecting our business, like we've done a number of different provisional patents that, relating to like industry types and other things that we have like sort of going right now. But it's really on the automation side and the workflow is like the way that we see it. But on the same token, having humans in the loop, all that's going to do is allow for more to go through our system,
Yeah.
and 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 certain pieces are going to be kicked out to humans where they're going to require, and then as like AI gets smarter and better, we're going to try to automate that as well. But there's still like I don't view the AI displacing necessarily like our employee base. I view it as like, if there's like mundane sort of tasks that are being done, like, yes, we're going to try to automate that. But like, if an employee wants to stay, and again, I say this like for Credibly and any other industry wants to stay in front of this, there's so much opportunity.
Yeah.
But if you put your head in the sand and you don't realize that something really big is happening in technology, I just think you're making a mistake, and you should realize and learn a little bit about it and play with, the different large language models to see like the capabilities that it really has, so you can add value to it, because there's plenty to do, and it's I think we're still in like the early innings of it, but you can see the speed at which it's changing.
Yeah. And so, I mean, I think basically what you're saying is take the mundane things that you've done and level up and create more space to do something value add, right? I mean, I think that's
Yeah,
ultimately what we're saying in most cases.
that's exactly right. That's where there's in the business that we're in, which is lending money to small businesses. Businesses, there's so much that's not mundane. There's so much there's so many businesses that are complicated. They have a corporation, and the partner is the partner of the corporation is owned by an LLC. The LLC's has four LLCs that are the partners or members of that LLC. Like, and you have to figure, it's a jigsaw puzzle, and you have to
Sure.
sort of put it all together to figure out who is the owner of the business. And it sounds like a very basic question, but it's not so
Always
basic
simple.
sometimes.
Yeah.
Yeah. So, and those are like some, that is a big piece of like what we do, is really trying to figure out ownership. And then making sure that the person we're dealing with is the person that we believe we're dealing with. So, just because, again, you just said, like, know your customer, that is our business. Like, we just want to make sure that we're lending to the company we believe we're lending to.
Yeah. So as you think about this, like, how does your business change over the next 3 to 5 years? Like, with AI and stuff. I mean, do you see a kind of a step change? We're getting a glimpse. Like you said, it's early days. I think it's funny. Like people, I think some people are kind of saying, "Hey, it's a bubble," but like even just what we have today, put into it the application layer of all of these software products could do so much value, right? I think but like you got to figure out how to integrate and do this. And it's just a tool. If you're looking at it just from a chat bot, maybe it's got some utility, but I think from an API with workflow and Boolean equations and structure, like there's just no end to the things that we can automate. So I'm curious, as you think about roadmap with these types of tools, what does the next 1, 3, and 5 years really look like for you guys?
Yeah, like really, we want to get to a point where we're, have a full automation. I mean,
Yeah. Yep.
from like, and when I say, for a certain segment of our applicants, okay, so like, I will never be at 100%
Yep.
of automation. So, I mean, but like if we can get through, the top 10%, and maybe we can make the top 10% 20% one time, in 2 years or 3 years or whatever, where like it actually goes through our system without a human touching it, and they receive
Mm-hmm.
an offer and funds.
Yep.
That's the goal we want. That's where we want to be, and it's ambitious. There's other companies who have done it in the past, and it didn't end well. So
Yeah.
we don't want to be one of those companies.
No, not at that
Okay. So,
expense.
yeah. So, it's like, we are lending money. People want money, and they're going to do things that are potentially nefarious to get it. And so our guard is up at all times, in terms of like how we look at our applications. And, with the advent of like sort of generative AI, I think the fraud is becoming more pervasive
Yep.
and, better. And so we need to stay in front of that and be better too. So
Yeah. Maybe my last comment or last question for you is just around, kind of bootstrapping. From what I understand and read, basically you bootstrapped this business, didn't take any money. That's unusual. I mean, I think, I think there's been a cultural alignment around if you got a business, you got to get VC money to scale. I think we probably both have seen situations where founders get screwed through this process. Either growth doesn't happen, they get taken out, dilution, terms in these contracts. In our program, we're really kind of think about it as seed strapping is basically the philosophy we have. You can maybe take a little bit of money, but you got to build a sustainable business. If you really want to take it, you just got to do it with your eyes wide open. But 15 years ago, you were probably against a lot of norms. And so I'm kind of curious on, was it a control issue? Did you see I just didn't need a lot of capital, or you had the capital to go do this? What was the thought process there?
It was a little bit of just not wanting to cede control.
Yep.
So and I would say we wanted to build the business the way we wanted to build the business, and
Yeah.
kind of control the business. And we did take on a private equity partner in 2014. We ended
Okay.
up doing a management buyout in 2022.
Mm-hmm.
And so now we're that might be a separate podcast, for my experience with private equity, but
Sure.
it wasn't for me. I'll
Yep.
just leave it at that.
Yep.
So I, because there are speed bumps, and they will, and there are dilutive triggers that
Terms.
occur.
Yep.
Yeah, and so what you think you can prepare for, nobody could have prepared for the pandemic. I mean, there's just or let me just say, we couldn't. We
Yep.
didn't. That's not something we contemplated. A 1 in 100 year, sort of pandemic. So I just think from taking money, I would just say, be. I would say try to maintain as much control as you can, and try to take as little as possible. Would be my advice.
And do you think you guys were just super capital efficient? I mean, I think that's another good characteristic. I think, you take somebody else's money. There's a company here that's probably taken 23 million. I mean, if you put him under truth serum, I guarantee he'd say, I didn't spend most of that effectively. I think that, I had it in the account. I spent freely, and I wasn't nearly as cash efficient as I was in the early days. And so building that into your culture, I think is a really good thing, regardless if you're going to take money.
Yeah, I mean, and it does bring a different philosophy. So, when we brought the private equity firm on, I mean, they were looking to, sort of deploy the money not
Yeah.
in the loans, but in building the technology stack, marketing, things of that nature. So you end up spending more, and depending on where you're spending it, is if you spend it on marketing but you don't have the technology behind it,
Yeah.
it
You're not
doesn't make
capturing it.
sense. So
Sure.
yeah. So it's so you really have to be thoughtful. But then if you spent it on technology and the growth didn't come, the PE firm is going to say, "Where's the growth?" So it's just it is very much a double-edged sword, and it's not a simple way. You have to really kind of weave your way through it, and it's not simple.
Yeah, I can imagine. Well, Ryan, this has been a great conversation. I really appreciate the time. If people wanted to find out either more about you, follow you, or find out more about your products, where do they go?
So, we're at credibly.com, credibly.com. Again, that's our website. That's probably the best way. LinkedIn, I'm Ryan Rosett. But at the same token, we have a social presence across every social media, platform
Channel.
out there. So,
Yeah.
yeah.
Well, good. Well, thank you very much for taking the time to share your experience. I think there's a lot of nuggets in here for people to kind of leverage, and it's just an interesting perspective. So thank you for taking the time.
I appreciate your time, and I appreciate the questions. It was great. Thank you very much.
Thanks for listening to Startup Stories from the Treehouse. If you enjoyed this episode, please take a moment to follow, or subscribe wherever you get your podcasts. And if you found our conversation helpful, leave a review. It really helps other founders discover our show. For more insight and episode summaries, don't forget to subscribe to the Wildfire Lab Substack. We appreciate your support and can't wait to share more stories with you next time.